All right. Welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. In this show, we talk about what's happening in the markets and how we're trading them. Today is Friday, August 4th. So the S&P tries to snap a 3-day losing streak. Jobs. The jobs report is out. Amazon crushes earnings with its best day since November. Apple disappoints. Block takes a hit. Plus, we'll review our open trades, and we took a few new or open positions, and we took a few new trades yesterday. So we'll share those. As you can see, there's a lot to talk about. So let's go ahead and get started. Now, if this is your first time here, my name is Mark Hodge. I'm head coach at Rockwell Trading. And today we'll call the show Coffee with Mark because I will be running the show solo. Now, Marcus, for those of you that have been following along, is on the last leg of this epic regatta road trip. So he will be back in action really soon. With that said, I promise that you're still in good hands. You could say we have a ton of trading experience. We know our stuff. We're not afraid to tell it like it is. So if you're looking for some honest insight into the world of trading, then you are at the right place. Now, before we dive in and show you our trades, let's take a look at what's going on in these crazy markets. And I have a chart of the S&P 500 up, and we're seeing a little bit of a bounce. So 3 consecutive losing days. Yesterday, although we seem to have paused and maybe found a little bit of a bottom, at least a temporary one, markets are higher today. And a lot of this is tied to news. But before we look at the economic calendar and see what took place this morning or what came out this morning, we see that the S&P is up 0.5%. Looks like we're going to snap a 3-day losing streak there. The Dow also up 0.5% on a 2-day losing streak rather than 3-day. And the NASDAQ looks like it's going to snap a 3-day losing streak, bounce back a little bit, up 0.7% right now. So let's take a look at the economic calendar here and see what we have going on. We mentioned this week that it was really all about earnings and all about jobs. And this week we had a ton of jobs data to digest. On Wednesday, ADP non-farm employment numbers came in much higher than expected with 324,000 jobs added versus a 191,000 estimate. And then here we now see that the monthly jobs report, that's really the key report here for jobs. Average hourly earnings came in higher than expected, up a tick 0.4% versus the expectation. So a tick higher than the expectation. Non-farm employment numbers, though, coming in lower than expected. 205,000 jobs expected to be added. Now 187,000 actually added. So this came in lower than expected. The unemployment rate ticked lower. It's at 3.5%. So what does this mean? It means that jobs and the data here is a little bit cooler than expected, slowing down a little bit with fewer jobs, unemployment rate strong. This slightly higher than expected average hourly earnings has things a little bit mixed because ideally the Fed would like to see average hourly earnings coming down. That's not the case, but all in all, it looks like traders thought this was a good jobs report for the market. If we look at the E-mini S&P, and we go to a 5-minute chart here. Let's go ahead and there we go. We see that when the report was released, we rallied on that news. After the open, we pulled back a little bit, but we're rallying again. The initial reaction, though, positive after that jobs report. Right now, higher across the board. And if we go back to PowerX Optimizer and we look at the heat map here, we see that it's really kind of a broad-based rally. Here we have the S&P 500. There's a lot of green. If there is a little red, it's minor, aside from Apple, which we'll talk about. If we look at the NASDAQ, we see that there's that big red for Apple, a decent amount of green, a little more red in the NASDAQ. And the Dow 30, there's Apple again. So Apple's standing out like a sore thumb. And we will definitely discuss what happened there. But all in all, the markets are a little bit higher. Now, we talked about yesterday fear spiking in the fear gauge, showing that traders are expecting more volatility and more potential price fluctuations in the market based on S&P 500 options, and that's coming right back down. So after this spike, we're seeing that drop again, now below 15. We'll see where we go from here, but no surprise that while the market's up, the VIX is down, especially because we had this big data that was released in the morning, and so you typically see that volatility increase as traders are anxious waiting for data to be released, and then you have what's known as volatility crush after that news comes out and has been digested. Now, taking a look at some market movers here, let's first take a look at Amazon. Now, Amazon, if we look at the chart, what an earnings reaction for Amazon. Talked about Amazon yesterday, and the takeaway was that Amazon earnings beat most likely. The reaction to earnings tends to be hit or miss, so a bit of a coin toss. And then on the seventh day after earnings, at least based on the last 12 quarters, on the seventh day, Amazon tends to be lower. We'll see if that ends up being the case, if that trend remains true. But right now, it doesn't look like it. Amazon up over 11%, gapping higher and continuing to rally. Let's look at a weekly chart here of Amazon, and let's go ahead, make this a little prettier here. We see that Amazon trading at levels that we haven't seen since August of 2022. And right now, as far as the week goes, it looks like the best week since we've had since July, just at first glance, and it's the best day so far since November. So a big jump for Amazon. If we look here, we see that earnings had there was an earnings beat, so better than expected earnings per share, also a better revenue number as well. They had their best quarter since 2020. Return to double-digit revenue growth, and just an earnings beat all around. They also issued better than expected guidance for the third quarter. So traders just loving everything that Amazon had to say, and a big reaction there. So anybody holding Amazon, good for you. Nice opportunity to see a little more upside on this one, and we'll see what happens once this information is digested over the next couple of days. Let's take a look at Apple, because Apple actually had the exact opposite reaction. Apple getting hit with a little bit of a loss, down 2.6%, gapping lower, selling off a little bit, now stabilizing, trading back above the open for the session. Apple did have an earnings beat, so reporting better than expected earnings, also better than expected revenue slightly, but sales were down for the third consecutive quarter. And although Apple doesn't provide official guidance, their CFO said that the company is expecting another quarter of declining sales for the next quarter. So traders not really liking that information. On a positive note, iPhone sales are expected to improve, and their service revenue reached an all-time high, which would be subscriptions like iCloud subscriptions, Apple Music, News, and Apple Plus. So those subscriptions hitting an all-time high. I mean, that's something that traders might look more into, because the focus has been so much on iPhones and iPads, mostly iPhone, and there is a rumor that they will unveil a new iPhone in September. We'll see if that ends up being the case. But with subscriptions and that service revenue increasing, that's somewhere where Apple could even do better. So we'll see. I like Apple overall. We just have this nice, strong uptrend here. And as far as a wheel candidate goes, just not the best stock to trade wheel-wise with the type of style that I do. But I think Apple's a solid company. For anybody who likes Apple, might be an opportunity here on this pullback. So let's take a look at another one. Square, or actually Block, formerly known as Square, but still keeping that SQ ticker, down 12%. And look at this. So if we look at earnings here, Square beat earnings, better than expected earnings, better than expected revenue, but traders hammering Square, down 12%. Kind of a nice range here. and we're getting back into that lower range down below its 50-day moving average. Where is this? The 200-day? I can't remember if I changed that. Let's just make sure. Yeah, this is 200-day moving average. So Square taking a bit of a beating here. Now, let's talk about trades and open positions. And with the pullback, this is something I've been waiting for. With this week's pullback, we know the market doesn't go up, 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 and up. Although I believe that fundamentally the markets are set up to move higher over time, there's going to be pullbacks. There's going to be that reversion to the mean. And on these pullbacks, there's a great opportunity to take advantage of these moves. And that's what we did this week. So in our mastermind call yesterday, let's go back over here and let's take a look at open positions. I'll bring up my portfolio, and my portfolio consists of 4 positions right now. So let's first take a look at CSIQ. This is a trade that we took at the beginning of last week. Marcus and I both sold the 35 put. It looks like it's going to come down to the wire here. Right now, CSIQ trading at 34.89. We are okay getting assigned at 35, owning shares at 35, and then selling calls. But we'll see what the stock and traders want to do. So will we finish above 35? Will we finish below 35? We'll have to see. But not doing anything with that trade because I welcome assignment. That's typically when we start to see bigger profits. When the stock is pulled back to a support level, we've sold, we got paid to potentially own shares, and then we're able to buy shares at a discount, sell calls that are at the money or slightly out of the money. That's where we get a real nice boost in profits and premium. And we just have to see where we end up. Might be like watching that roulette wheel spin and seeing where that ball lands going into the close. We'll have to see. Now, PNC, another one that we've been in for a little bit. And PNC, I was able to roll the 136 calls that I sold 2 weeks ago last week to the 137, which is what I actually bought back and closed yesterday. So I no longer have PNC calls. I was able to close those at 90% max profit. Our goal, the incentive to do that is that when we collect premium, we know that the profit potential is limited. It's capped based on that premium that we've collected when we sold that call. So we can't make any more money than the amount we got paid. And if we know that we can close that, we could buy it back and lock in 90% of that max profit, makes sense to do so because we might get another move that gives us an opportunity to sell calls again. Right now, I'm in a position where I can watch PNC, see where we go from here. Now, yesterday, there was 30% annualized on the 136 calls. That's my cost basis. So I'm in a position where I can sell 136 calls, or I could sell calls higher. The 137 for next week didn't have enough for my rules to get 30% annualized. But right now, I'm liking this trade. Cost basis is 136. My break even is 130.90, meaning that I'm profitable on this trade based on the premium that's collected, even though we're trading below our break even or our cost basis. That is the average share price that we purchase shares at, or that I purchase shares at. The break even is lower based on the premium that I've collected. So I'm keeping an eye on this one, and we'll see if there's a little more upside. This might be a nice one to sell 136 or 137 calls. I'll be keeping an eye on this today. 2 new trades. NEE, a trade we took with our mastermind group yesterday. So NEE, Next Era Energy. This is one that actually has been trading in a nice range. We could look at here, and as far as the chart goes, some real nice movement here. Might have some support around 68, 70, kind of this support zone there. Rallies up to 84, even getting up to 92. We have this nice sideways movement, nice support here. I like this opportunity for 69.50. I sold that for next Friday. Right now, it looks like you could get the 69 and get 50 cents if you like this one as a potential candidate. PE ratio at 33, 34, a little on the high side, but does pay a dividend of 2.57%. We look at the income statement, positive net income for 5 quarters. Actually, that would be annual, but the quarterly picture is the same. So all in all, fundamentally, this meets our criteria, even though the PE ratio was a little bit on the high side. Chart wise, I like it. 69.50 is where both Marcus and I sold puts. Right now, it is down a little bit. So the premium that we collected for that 69.50 a little higher today than it was yesterday when we sold those puts. Another one that we traded yesterday, ALB. ALB. Now this is where Marcus actually sold the 192.50. He got a buck 65. I want to say I got the 145, but I went with the 190. So this one, a bit of a earnings reaction. So earnings were reported, gap higher yesterday, and then fell throughout the day. Ended up closing lower. Now this one, chart wise, there's kind of this potential support in this zone here, a little bit lower, 172.50 up to maybe 195, and we see that recently we had these lows around 193, 192.50, and that could be potential support. That's where Marcus was. If this dropped down to the lows that we had this year around 172.50, that's possible. That was why I wanted to go with a lower strike. We have the previous lowest close indicator that we built into the software here at 192.50, although it increased recently and it's showing a little bit of a warning with this push lower. So long story short, we like the way that this company looked fundamentally. Low PE ratio, pays a dividend, but I wanted to go a little more conservatively with the strike price. I did collect a slightly lower premium with that decision. Marcus went a little bit higher. Right now, it's working out nicely, up 33% based on the premium collected and where we could close it right now. And we'll see where it ends up. So these are the four positions that I currently have. PNC looking to sell calls, NE for next Friday, ALB for next Friday, and CSIQ expiring today. And we'll just have to see if that ends up expiring in the money and we own shares, or if it expires worthless, and then we could consider a new opportunity next week. Well, let's take a look at the economic calendar, see what we have in store for us next week. And we see here that it's going to be a week for inflation data. So, not a whole lot going on with the economic calendar until Thursday. Core CPI data on Thursday, unemployment claims as well, something to keep an eye on. Then Friday, we have PPI data. So, Thursday, Friday, the real focus for the economic calendar. If we take a look at the earnings calendar here, let me go over here. Earnings, we've gotten through the big earnings reports. Let's look at the calendar and let's look at next week. So we see that things slow down a little bit. These are the most anticipated. 85% of the S&P or 84% of the S&P has reported earnings based on FactSet data. 80% have beat Wall Street expectations. Next week on Monday, we have Tyson Foods before the bell. On Tuesday, Eli Lilly before the bell, UPS before the bell, Duke Energy on with Take-Two Interactive after the bell. We have on Wednesday after the bell, Disney, Illumina, Wynn Resorts. So things are definitely slowing down. Next week, the focus will be on inflation with the economic calendar and a few decent reports for earnings. So that's going to do it for today's stock market update. If you enjoyed this video, please give it a like. We like likes. And if you're new to the channel, please subscribe. And have a great day, great rest of your weekend. Until Monday, happy trading, everybody.